Pozdravljeni, sem Marko Pahor, viceguverner Banke Slovenije. Dobrodošli v novi epizodi podcasta Centralni pogled, v katerem odpiramo vprašanja z področji, ki sodijo v okvir delovanja Banke Slovenije. Med njih spada tudi nadzor nad bankami in hranilnicami. Vas zanima, kako ta nadzor pravzaprav poteka, kako ta nadzor opravljamo v Sloveniji, kako poteka znotraj Evropske bančne unije, kje so največji izzivi. O vsem tem sem pogovarjal s Klavdijo Buh, predsednico nadzornega odbora enotnega mehanizma nadzora pri Evropski centralni banki. Gre za eno najvplivnejših osebnosti evropskega bančnega nadzora. Kot ekonomistka in profesorica je znana po analitičnem, na podatkih temelječem pristopu k nadzoru bank ter poudarjanju odpornosti, zgodnjega ukrepanja in sorazmernosti v evropskem bančnem sistemu. Ravno zaradi teh razlogov je ona najboljša sogovornica za pogovor na temo bančnega nadzora.
Poslušate Centralni pogled, podcast Banke Slovenije.
Madam Chair, welcome to our podcast. So the first message we are usually trying to convey to our audience, to our banks is banks are safe. And they have been safe for a while, but a lot of us still remember the great banking crisis that started in 2008. What changed after that in the European banking system?
Well, first of all, it's good to be here. I've been to Ljubljana several times, and it's always a pleasure to be here and also to talk to the colleagues. Yes, indeed, the banking sector, the European banking sector, is quite resilient. So when you look at the numbers, capital, profitability, liquidity, all these financial indicators look good. And this is a big achievement because indeed a lot has changed since the global financial crisis and also the sovereign debt crisis and also the difficult times that were experienced in this country. So what has changed? First of all, risks on banks' balance sheets have been reduced. There were very high non-performing loans at the beginning also of the banking union more than 10 years ago. We have common supervision in Europe, so we apply the same standards, which I think is a big improvement. We have better regulation, more capital in the banks, and also a better quality of capital. And capital is so important because it really can be a shock absorber. So if banks get into difficulties, then they need their own buffers so that a shock is not ultimately affecting taxpayers and the wider public. So this is why better capitalization is very important. And then maybe as a final element of the banking union that I would like to mention, we have resolution regimes. So what does this mean? That means supervision is not about preventing the failure of banks. It makes the failure less likely, less costly. But if failure happens, we also need mechanisms. We need also industry-financed funds that can absorb losses. And this is what we have in the meantime. So we have the banking union, better, stronger rules and regulation, better supervision, European supervision, and resolution regimes to deal with failure.
So yeah, what we saw in the crisis on the national level is that problems accumulated, and in the end, they ended up costing taxpayers quite a lot of money. So would you agree that one of the benefits of this common European banking supervision is that it sort of challenges the national authorities and prevents these blind spots, and in the end, ends up costing taxpayers less money?
Well, this is exactly what the whole reform package that I've described is about. Reducing the probability of failure, making it less likely that in case of stress, taxpayers' money is being used. I wouldn't necessarily say it's about challenging the national authorities, because we actually work very well with the national authorities in the single supervisory mechanism in European supervision. This is really a joint activity of the ECB, but also of the many national competent authorities, as they are called. So we work together to make sure that the system remains as strong, as resilient as it is.
Well, the crises are reoccurring. You are often stressing this when you are making your talks, that the crises have this reoccurring nature in it, right?
This is what we know from economic history, and you don't need to go as far back in history, but yes, indeed. I think the resilience of the European banking sector that we're observing right now is certainly not, the ground for complacency. So we do have many risks that have not only appeared on the horizon, geopolitical risk, the increased risk of cyber attacks, but geopolitical risks, for example, have already materialized. We have military conflicts, we have higher tariffs. So all this is something that the banks need to be aware about. So this can have an impact on their credit quality, on their resilience. So they need very strong safeguards to make sure that they're not affected.
But they do come in different flavors, right? The crisis. So you might have the solvency crisis where there's lack of capital, or you might have liquidity crisis. And we've seen also in Slovenia, we've seen both. So back in the great financial crisis, it was mainly a solvency crisis. So banks did not have enough capital. Nowadays, it's much different. It's twice the level of capitals that were back then. But then we also saw, after the Russian aggression on the Ukraine, we saw a liquidity crisis in one of the Slovenian banks, right? So, and this happens much faster, right?
Yeah, I mean, I don't want to comment on individual banks, but indeed we look at both. I mean, as supervisors, you need to always scan the horizon. So you can't just focus on solvency or liquidity. We look at both. Actually, we have what we call an annual health check, a supervisory review and evaluation process where we look at solvency, liquidity, but also governance and banks' business models. So we try to be very holistic there. And if you look at the challenges that the banks are currently facing, there could indeed be challenges both on the solvency and on the liquidity side. To give you an example, we see that the digitalization of financial services is gaining traction, and that can have many benefits also for consumers, for savers. But it may also mean that deposits can move faster. So far, we are not having evidence that this is happening, but it's something we monitor very carefully to make sure that there's no liquidity issues arising from that side. And then I mentioned geopolitical risks. So we have not seen so far that the trade tensions show up in terms of weaker asset quality in the banks, and this is good news. But this is something which we also need to monitor. This does not have immediately solvency consequences, but it's something, credit quality, good risk management is something that clearly we need to monitor.
Yeah, I think you made a very good point that, with all the digitalization and everything that's happening, things are much faster, also in terms of, when there's a banking crisis, usually, so before instant payments, for example, we had this weekend where everything stopped and this bought you some times. But nowadays with instant payments, if trust drops in a bank, things can happen much faster, and they can even happen on a Sunday, which wasn't the case before, right? So, but thinking about this, how much should we concentrate on individual banks and preserving each individual bank, and how much effort should we put in the whole system, because contagion might be faster right nowadays?
Yeah. I mean, the first thing that you mentioned, trust in the banks, this is so important, and one can't stress it more, because what we're seeing that now markets have more trust in European banks. One of the big achievements, I think, also of the work in the banking union. It's of course up to the management of the individual banks to make sure that this trust is there. But we also need good supervision, and this is, I think, something that we should also maybe bring more into the public debate. That in the end we're working for the savers that need to have trust in the safety of the individual institution. But as you said, this is not everything. So, and maybe one big improvement in the system after the global financial crisis is that now indeed we have more work on financial stability. And the Bank of Slovenia, I'm sure, also publishes financial stability reports. And this is exactly about taking this systemic perspective, because we know that it's not enough just to look at the individual banks. This is the basis. This is very important. But we also need to consider risks in terms of contagion and risks of vulnerabilities building up within the system. This is why we now have financial stability policies, macroprudential policies that ensure exactly that.
Now, one interesting question I'm always getting about supervision is, what are you even doing in Slovenia? Doesn't Frankfurt supervise everything? But shall we make this distinction a little bit? What are the 113 systemically important banks that are actually supervised by the ECB directly, but in cooperation with national competent authorities, right? And what is then in the hands of the national competent authorities themselves?
Well, the whole decision making is with the national competent authorities, because we sit together at the supervisory board table in Frankfurt, and each national competent authority has a voice there. So it's not that we take these decisions in Frankfurt alone, but it's a joint decision making where all the national authorities are being involved. So this is about the decisions, but decisions need to be prepared. They're prepared by joint supervisory teams. And within these joint supervisory teams, we have the local knowledge from the national competent authorities. So the local supervisors, the national local supervisors are represented in the joint supervisory teams. And by the way, also in the on-site inspections that we're doing in the bank. So I think this is actually a good balance between centralized decision-making with the national competent authorities having a strong say in that, but also bringing in the national expertise.
Yeah, the local knowledge is important. And I'm also, when I'm talking to supervisors here at the Bank of Slovenia, they say like, yes, we are important. We are the ones who have direct contacts with the banks. And also they never feel they're like neglected, because we are a small national competent authority. And also me as a representative in the supervisory board, I do feel that I have a voice. I mean, I'm listened to when I have something to say there. But yeah, the supervision does become more and more standardized in a way, which is a good thing. So one of our slogans is "One team, one voice," which should be like that. But is there still any space for national peculiarities? So in the ways how countries differ within this unified system?
Mm-hmm. Yes, in the sense, of course, that we need to take national conditions into account. We need to understand what's happening in the local economy to also do good supervision, because in the end, the banks are active in this country and in other countries in Europe. So we need to understand what's happening there to understand the risks. But at the same time, we have common rules that apply to all banks, and this is very good. So we have a single rule book, as it's being called. And we also have, and that's another benefit of the single supervisory mechanism, we have common methodologies, common standards that are applying to all the banks. Of course, we can take into consideration that some banks are smaller, larger, they differ in terms of their risk profile. So this is all something we take into account, but we do this within a common methodological structure. And I think this is actually very useful also for the local supervisors to understand how their banks perform relative to other banks in the system. This is what we call benchmarking. So this is something that we can do at the European level altogether, but not necessarily at the national level to the same extent.
Yeah, the benchmarking is super useful. Also, when we have board meetings, when we are discussing one single bank, it's always like, okay, so how does it compare to other banks in Slovenia? How does it compare to other European banks? It's super useful to position yourself, really. But maybe moving to a slightly different topic. Even though we have a good mechanism of supervision, it's been there for over a decade right now. We are now in the process of reforming it, right? So we call it the next level supervision. So should we explain a little bit about what is this next level supervision all about?
Yes, absolutely. So we've been talking about what has been achieved. So common standards, common methodologies, we together supervise the banks. At the same time, the system has become relatively complex. So what we started actually a couple of years ago was to go through all of our supervisory activities and ask ourselves, how can we streamline? How can we improve the way we do supervision? And we have three main criteria to assess whether we actually improve. One is we want to become more efficient. That means we maybe can perform the same supervisory tasks in a shorter period of time and with less, costs imposed on us and also on the banks. The second is, can we be more effective? So can we achieve what we want to achieve? For example, that banks, as we call it, remediate open findings. Can we achieve this with different tools? How can we be more effective and more risk-based, which is in the end also about proportionality. So supervision should be proportionate to the underlying risk. So these were our three main objectives. And we then went through all of our supervisory activities to see how we can achieve these objectives: efficiency, effectiveness, risk focus. And one must say that we actually see quite big benefits already for the bank. So I think we have faster decision making. We have more targeted communication and also explaining what are our supervisory priorities. And we are now rolling this out across everything that we do, the annual health check of the banks that I've mentioned before, but also authorizations, on-site inspections, very important, one of our most important tools, but it can also be quite costly. So we need to use this in the best possible way.
Proportionality and simplification is not important just for the banks. Obviously, it is important for the banks. So, I mean, if we lower administrative burden to the banks, they can focus more on business. It's also important for us as supervisors, because then we can focus from the form to the actual content and to actually bring in the expertise, right?
Yes, absolutely. We also have limited resources that we need to use carefully. So it has benefits for us, clearly. But I think it also has benefits for the savers, because don't forget, in the end, supervision is about working for the savers, for the depositors in the banks, to make sure that deposits are sound and safe. And that means we need to focus on the most relevant risks. And this is also what the reform program is about.
We did mention earlier already that we already achieved a lot of things with the European supervision model. So banks are now much safer, are much better capitalized. But still, there are differences, and countries still differ. For example, in the non-performing loans, some banks that entered this at very low rates now see increasing rates. On the other hand, some countries see lowering of these rates of non-performing loans. So what do you think, this comparison of countries and averaging, how useful is it?
Mm-hmm. Yeah, I mean, the general trend has been very clear that non-performing loans have been declining throughout the system, and that's a big achievement. But of course, as we mentioned earlier, there's risks around us, and some of these risks have materialized. So this is acute geopolitical risks, but it's also structural changes that happen in the European economies. And we see small increases in non-performing loans, indeed, in some countries. And this is interestingly not the countries that started the banking union with high non-performing loans, but it's, for example, Germany, where also non-performing loans are not increasing rapidly. So that is certainly not the case. But we see small increases. And of course, the banks need to be vigilant to look at these risks. And we as supervisors need to do this as well. But one needs to be very careful to generalize, because in the end, as you're indicating in your questions, it's the individual bank that matters, and the risk management there. And overall, we've seen big improvements. We've seen improvements in risk management, and we've also overall seen big improvements in terms of a reduction of risk.
Especially in a small economy, it's not just the individual banks. It's also like individual corporates in terms of NPL. So if something happens in a small economy like Slovenia to a big corporate ticket that had loans in lots of banks, where these loans for one reason or another become non-performing, it can have an impact on the whole system, and it can be visible, right?
Yeah, so hopefully that wouldn't be immediately systemic, but clearly, I mean, the corporate sector also is facing its challenges, and this ultimately could also affect the banks. So this is why we need, and the banks need to do very good credit risk management, understand the financial situation of their corporate clients, provision adequately if they see risks emerging. Yes.
But still, the levels of non-performing loans right now that we are seeing are still very, very low compared to what we've seen 15 years ago. So we are very much on the safe side. Also, so liquidity right now, it's not an issue. The interest rate risks are very low right now. Still, we do want to have risks-based supervision. So what are these new risks that are emerging that we are paying a lot of attention right now?
Yeah, well, risk-based supervision and also forward-looking supervision. So in the end, the questions you're asking about what risks lie ahead, there's a lot of uncertainty. So I wouldn't be able to say this is the risk to focus upon. But we have, for example, if we just want to stay with geopolitical risk, we've developed a framework 2 years ago where we said geopolitical risk can affect the banks through different channels. Ultimately, it's a driver of traditional risk categories: credit risk, liquidity risk, operational risk. But it can affect the banks through the real economy channel, through the safety channel, the financial market channel. So we have now asked the banks in a stress test, what is a relevant adverse scenario for your specific bank, given the business model that you have, that could lead to a predefined capital depletion. So we're currently in the process of looking at the responses of the banks, and we will publish also the overall results later this summer. So this is the type of analysis we're doing. We don't have better information than others as to what might happen in the future, but we can make sure that the banks also do scenario analysis, that they try to be as forward-looking as possible in their risk management, in their capital planning.
Speaking of this latest stress test, banks actually have done a very good job. They really put a thought of, what could happen in the global risks to endanger their capital to some degree. So I personally am really looking forward to the final analysis, because I think we'll really learn a lot about it.
We will learn a lot, and I think also the banks learn a lot. Of course, I mean, there's always things we find, things where the banks can improve, where we have good practices. And this is also what we try to do with the stress test. We did it also with the cyber resilience stress test a couple of years ago, to also inform the sector as to what do others do, what are good practices. So in that sense, I think it's a learning experience for both, for the supervisors and also for the banks.
And then another group of risks that we're also paying quite a lot of attention at lately is the cyber risks, also connected to the artificial intelligence. And some would say, like, why are we even, considering this as much? We haven't really seen a lot, or so very minimal damage being done to the banks. So why are we looking at these risks? Why are they so important to us?
Well, because, first of all, cyber risks have increased. So the number of attacks has increased, and also the severity of attacks has increased. So, and all the banks, if you're talking to them, they take this very seriously, and they put up their defenses. They make sure they have good risk management in place for cybersecurity. And that also means quite a bit of investment. So I wouldn't say that the banks take this lightly. And with the advent of frontier AI or large language models, the speed and the need to react very quickly to potential cyber attacks has increased. So this is why we've also spent quite a bit of time to inform the industry of what this risk could be, what needs to be done. This is not an entirely new risk. So cyber risk have been elevated for quite some time, but the speed and the intensity and the need to react quickly, this is changing, and this is why I think there's a lot of vigilance and also a lot of work to be done in the banks that is needed.
So it's not so much the level of risks, but the speed of risks that has changed, right? Mm-hmm. And you did mention this need of investments from the banks, and one might imagine, okay, so if it's a large bank, it can absorb this cost, but we are here in a system with relatively small banks, some very small banks. What could be the answer for those banks? Pooling of resources, maybe?
Well, this is ultimately a business decision they need to take, and I can't give advice or take the decision for them. But it's clearly the case. What we can do, we can inform the banks what are good practices in terms of cyber resilience, and we've done so with the cyber resilience stress test that I mentioned earlier. We can provide information that we have also from other banks that have maybe more experience with some of the new tools that are available. And this is exactly what we are doing, making sure that everybody's aware and then takes the right decisions to address these risks.
That definitely is one of the roles as us as supervisors, also to share the good practice and to encourage banks to do so. Maybe one last thing. So you have mentioned at the beginning of our talk today that single supervisory mechanism is one pillar and a single resolution mechanism is the second pillar of the banking union. We still have the third pillar that is left unfinished, right?
Yep, that's European Deposit Insurance. And it's in the end, it's a political decision that needs to be taken to complete the banking union and to add European deposit insurance as the third pillar, I think there's a very good business case to do so. So if you consider what we've been discussing, so risks have reduced, non-performing loans on banks' balance sheets are significantly lower than they used to be. I think it's also good for European savers if they know that their deposits have the same level of protection across Europe, irrespective of the strength of the underlying sovereign. So we have generally the same rules for deposit insurance in Europe, but we don't have a European deposit insurance system. This is organized at the national level. And in the end, we also mentioned the bank sovereign nexus. In the end, I think it's also the best way to further reduce the bank's sovereign nexus. So, as I said, the business case is quite compelling, and we as supervisors can't take political decisions, but of course we can inform the debate that is hopefully gaining traction now.
Well, the business case is there, especially in the light of developments in the banking system, more and more cross-border actions from the banks, either branchification of certain subsidiaries, also the growth of the neobanks like Revolut of N26, right, which they operate from one country. So there really would be a business case for that, yeah.
Yeah, so you mentioned all these developments, but still we have relatively few deposits that are really held cross-border. So I think it's less than 2%. So clearly European deposit insurance would also, in all likelihood, increase the incentives to go cross-border, yeah.
To finish this talk, what would be your final message to the audience in the light of banking supervision in the next decade?
Well, I mean, a lot has been achieved. We discussed the achievements, and I think it's very important to further develop in the new environment, but also to make sure that we maintain very strong supervisory and also regulatory standards. Because this is really, in the end, what matters for savers, for depositors, for the broader population, that we also keep in the very challenging risk environment that we're facing, that we keep banks which are sound and safe, and this is what we're working for.
Thank you very much for this really interesting and enlightening talk.
Thank you very much for having me.
In hvala vam, ker ste nam prisluhnili. Sedaj vemo, zakaj so Evropske banke varne in kje so trenutno največji izzivi. V podcastu Centralni pogled pa se bomo prihodnjič posvetili prihodnosti. Pogovarjali se bomo o sodobnih plačilnih sredstvih ter tudi o digitalnem evru. Preden pa ustavite posnetek, povejmo še, da si želimo tudi vašega sodelovanja. Zanima nas, katera vprašanja in katere teme so vam pomembne. Pišite nam na pr@bs.si, veseli bomo vašega odziva. Spremljajte nas na spletnih straneh Banke Slovenije, na naših družbenih omrežjih in na vaši najljubši platformi za podcaste, kjer nam lahko daste tudi kakšno oceno. Hvala vam, ker ste nam prisluhnili.